Justin, Jack, thank you guys so much for joining us today. We are really excited to have you guys on. As you guys already know, I'm super excited just because this is my first webinar with Madison Trust,
Right.
and I couldn't be happier about it. I'm over the moon. I always like to start off with everyone's favorite part, our little disclaimer that Madison Trust is, in fact, a passive custodian. So we don't give any type of financial or tax advice. We can always give you an idea as to what you're looking to do, but again, we don't give any type of official advice. So, with the fun stuff out of the way, I figure let's hop right into who is the Lucky Group and what do you guys do?
Sure. Christian, so great to be here. And I guess let's just dig right in. We are an alternative lender for people with think unconventional methods, think people without a W-2, maybe an Uber driver, maybe a bartender, maybe a commercial real estate broker. The list goes on and on. We will qualify them through internal underwriting guidelines, making sure that they can qualify for mortgages that banks typically will not lend to. Again, we're more of a startup company right now. We're really, really trying to scale. We're really excited to be on these webinars with people like yourself, who we trust, people that we're really, really excited to partner with, and just continue to grow with the mission. Excited to be here today.
Absolutely. Absolutely. I love it, guys. And just out of curiosity, where are you guys located for those of us who are not in the know?
Austin, Texas.
Good old Austin. Absolutely love it. As you guys probably already know, we here at Madison love Austin, Texas. We spend a lot of time out there working with different sponsors and organizations, even some fundraising. So Austin is near and dear to our hearts, and which is why we're so happy to have you guys on as well. So when it comes to the Lucky Group, one word kind of appears and it's vertically integrated platform. How would you kind of explain that concept to someone who's not familiar with the term?
Sure. Uh, I would tell you that we're, like I said, in startup mode as of right now, but slowly but steadily scaling up. We, due to our integration platform, are growing outside of just Texas, where we originally started in 2023. We're currently licensed in three different states. Those are Texas, Florida, and Tennessee, with more plans to expand into about seven or so more states by the end of, I want to say this year, but again, we're working on it.
Yeah.
The whole, I would say, integration process is really set up to scale and continue growing and continuing to help people while we still are able to grow as a team. We're hoping that in the near future, let's say 6 months to a year from now, we have a few more analysts that are able to help more people find deals. We'll be able to underwrite things with more institutional quality. And again, just continue to help people.
Yeah, and one thing I would kind of add on to that is that the vertical integration aspect of the platform really kind of speaks to the fact that we're helping people and developing customers on both sides of the transaction. We're identifying home buyers who really have been excluded from the traditional lending process and really kind of reconnecting them with home ownership and originating owner finance notes, which then on the other side of the transaction, accredited investors can invest in by pooling it into a fund, which is the Lucky Fund. And it is an accredited investor fund, 506C. So that's really kind of like, I think, a big part of the process of how we look at it as far as like a vertically integrated lending ecosystem is that we're not only identifying home buyers and people who need these sort of non-traditional funding sources and lending sources, but we're also identifying investors who can then kind of help facilitate the investment process and the purchase process of those homes and the origination of the notes. And we are kind of at the center of that hub, which for years and decades before this, owner financing and things of that nature was just really kind of inhibited by very large amounts of inefficiencies. And we're kind of trying to take a point at the center of that hub to really kind of erase a lot of those inefficiencies.
Very nice. Absolutely love it, which is something that I love about your company in general, is the fact that it's not just about making money, it's about helping people in the process, which is something that I love about what we do here at Madison Trust. There's no having to, you know, get one over on someone like there isn't a typical sales background. It's literally we are here to make sure our clients succeed, our sponsors succeed, that everyone's happy, healthy, and hopefully wealthy as well. So that's the big part of it. So let's see. Going to our next question. In terms of aspects of residential real estate, what would you say would make it appealing for someone who has a self-directed IRA to get invested with a company like the Lucky Group?
Or, I think there's a lot of diversification in residential real estate, from property values to property types to markets to tenant types. In this case, the tenant is obviously somebody that, may have a poor credit score, but has fantastic income from maybe it's student debt. Maybe they're coming out of a divorce. There are a couple of different things and a couple of different people that we're happy to get into on this webinar. But understanding that your investment money is going towards multiple different strategies and multiple different markets. Maybe, you know, some of it gets used here in Austin. Maybe we use some of it in Dallas. Maybe some of it's used in Tampa. Tennessee, for example. Nashville's an extremely hot market that we're really, really pushing to get into right now. There are definitely, you know, plenty of ways to get into this investment type and come out as a winner, both on the investor side and the home buyer side. On the home buyer side, we want to get you into a home that's going to appreciate over the course of the next 30 years. You get a mortgage and you're going to love it because you're going to get the home of your dreams. On the investor side, you're going to own the home and you're going to be helping somebody pay a mortgage while at the same time taking in really strong returns. That's kind of the beauty that Justin was kind of alluding to over the last question. But very excited to continue the growth, like I said.
Very nice. Very nice. I just want to make sure. Did you have anything to add on that one, Justin? Because I do have a follow-up question.
I mean, I would say that, you know, diversification inside of a portfolio is one of the biggest benefits that we can bring to the table, especially whenever you're talking about private market real estate and making that accessible in a way that doesn't create huge management workloads and kind of responsibilities for a person to become like a landlord, for lack of a better term, and to hold that asset inside of that portfolio. But we're able to provide them some access to that diversification in a fund structure, which makes the management workload of it just minimal, if not anything. And then on top of that, though, I think, you know, just kind of your basic and one of the biggest benefits is just, you know, tax deferred growth inside of the self-directed IRA account. And also the availability to reinvest your distributions in the future. Once you do start receiving cash flow from the investment, you can reinvest those distributions and really kind of compound your help to compound some of those returns in the future.
Very nice. Absolutely. With self-directed IRAs, someone said this to me recently, and it kind of is just buzzing in the back of my brain. And it's when you invest with the self-directed IRA and an investor gets those funds, it is patient money, because no one's saying, hey, my daughter's getting married next year, I need my retirement money. That never happens. So it's a really nice thing and an incredible background story. The fact that you guys are helping people when it comes to finding the people that are getting these homes, how do you typically find your customer base?
I will hand that one off to you, Justin.
Yeah, I mean, it's a combination of kind of what I spoke to earlier as far as that kind of dual aspect of identifying customers and developing clients on both sides of the transaction. You know, on the home buying and the lending side, we have an exhaustive underwriting process to where we are able to basically identify credit-worthy home buyers who have essentially been excluded from traditional lending platforms, you know, that kind of offer the 30-year mortgage, you know, from big banks and things like that. A lot of these people are just kind of being excluded because they're not the easiest people to approve in under 5 seconds. We're able to apply a lot of our subject matter expertise and experience in underwriting as a lender to that process to really kind of identify people who are still incredibly credit-worthy borrowers. And then at the same time, we have exposure to our investment networks and then private equity investors and things of that nature, accredited investors who can help facilitate the funding of the overall vehicle that allows for the origination of those owner finance notes after our lender really kind of we purchase the home on their behalf. And then the accredited investors really kind of get to participate in those returns and the upside beyond the equation. So it's really kind of a way that I would say that it's the underwriting guidelines that we developed and our ability to really kind of identify very credit-worthy and savory home buyers that just really kind of don't fit the perfect underwriting guidelines for some of the big banks, while also having relationships and exposure to the private equity side of the business and accredited investors who help kind of make the overall engine run.
That's
Add
awesome.
on to that, Justin. Sorry, Christian. We
No, you're
also
good.
work
You're
with
good.
brokers, social media people, coordinators, influencers. If you have a friend or anyone that you think might be interested in the program, we're always looking to get in touch with more people. By all means, please feel free to look us up on LinkedIn, the Lucky Group. More than happy to connect with all of you.
Fantastic. Fantastic. Honestly, that's where my research started with looking into it. I always go for companies that have interesting names. And when I saw the Lucky Group, I was like working with my partner, Zach, at the time. I said, hey, Zach, what do you think of this? He goes, let's reach out. And we had our initial introduction with Jesse, Jesse Cootie, if I saying it correctly, right?
Correct.
Just making sure I didn't
That's our
botch that.
founder.
Okay. All right, awesome. But yeah, from there, Jack and I formed the relationship, and then Justin and I are now have a not a relationship, but like a friendship, we'll call it. So, all right, guys. So let's move on to our next question. So, how does your team typically communicate with investors throughout the process?
Yeah, I will take that one. I'm really kind of the stop shop kind of for all investor questions. And also, more so, would say that once investors decide that they want to move forward with their investment and start the subscription process, I'm the person that they'll work through in order to get through all of our like getting invitations to our investor portal, which is an environment that is secure for our investors in order to sign documentation, receive the reports, tax reports in the future, and for us to really kind of communicate with them on an ongoing basis in the future. But then also beyond that, once they do invest with us, we provide them quarterly performance reporting, which really kind of breaks down the operational and financial narratives for what we've seen over the last quarter and what we're seeing into the next quarter for the remainder of the year. On top of that, the fund also generates K1 tax reporting. So we'll have those we endeavor to have those K1s to investors by the end of March of every relevant tax year. And then I would say that, just kind of as from a service standpoint and really kind of, that we really try and approach our business from a service mentality is that any investors who reach out to us for either service requests or just really questions related to their portfolio, their questions are acknowledged and or answered within the business day. And then we provide them with service updates every 3 business days until resolution. And so that's just really kind of like some basic service level agreements that we have with our partners and our investors so that they understand like, hey, like we're keeping our eye on the ball. If you have a question, if you have a problem, we're going to keep an eye on it. And we've got systems in place in order to make sure that we're providing you timely updates.
Very cool. I like that a lot. It's very similar to the way I try to approach things when working with various sponsors and clients. I call it the white glove approach, which I'm sure other people use that term as well, but it's something that's near and dear to my heart. I've always been called Mr. Customer Service when working with other companies and things like that. So it's still true here. I'm very much taking 2 calls at the same time, that kind of guy. But it's nice to see an organization that also values their customers as well as their investors as much as we do. Moving on to our next point, or next question, I should say. How does social media impact slash ECG investing play into ESG? I said it wrong. ESG investing play into your investment philosophy?
I'll take a stab at this one again. So our model directly addresses affordability gaps in housing. Again, kind of the whole point of the mission. We provide responsible financing to underserved families. So on the one hand, investors earn really strong returns. On the other hand, people get into homes that they otherwise couldn't. Whether you're a first-time home buyer, second, third, it doesn't matter. So long as this is your primary residence, we're going to get you the financing that you deserve. That combination of impact and fiscal responsibility makes the fund a natural fit for ESG investors, in my opinion. I promise I studied it in undergrad. There were a lot of things going on in the 2020s with the ESG guidelines. They are still probably evolving with the current administration, but I'm not going to get into politics on this webinar. Just again, know that we definitely do play a role in the ESG space and really happy to continue the mission of helping people that are otherwise not helped.
Very nice. Very nice. Let's see here. I just want to make sure I'm not cutting you out, Justin. I just want to see if you have anything to add just to be safe.
I kind of feel like that, ESG, whenever you really dig into it, it is a very complex concept. Like, you can get into all sorts of accounting concepts and, governmental stuff. It's like I said, it's very complex. And I think that, our vision is consistent with the mission of ESG, and is consistent with trying to address a lot of the problems that ESG aims to solve in a very sort of complex way.
Agreed. I know sometimes when it comes to the best things and the most helpful things, they can sometimes be the most complicated and daunting to some people, which is something we try to do here as well, is kind of take the rough points out of the process of investing with self-directed IRAs, just try to make the process an ABC as easy as it can be process. Obviously, sometimes people don't read our instructions fully, which happens to the best of us. I know I've been guilty of not reading instructions and filling things out correctly, but it's beautiful to see that, the harder things in life can actually be some of the best things. And the payoff in this case is fantastic on both sides for everybody. So kind of moving on to the next point here, do you guys have any examples that kind of illustrate your model or the model you, how do I say this? That help kind of illustrate how your model supports both home buyers and investors? I think would be the
Yes,
easiest way to say
sir.
it.
Give me 1 second, Christian. I'm going to share my screen. So, giving you all some full transparency, we have one of our investors on this screen named Dale. Not in the webinar, sorry, Dale. On the actual board. Dale has been in real estate for about 30 years. He's exactly who I want to be when I grow up one day, and has worked with us for the better part of the last 2 years since 2023 when the pilot program was originally initiated. Venus is one of the people that, his investment helped. Venus has been in Houston for, I want to say, a year and a half now. Could not find any financing elsewhere, could not find any other options, was denied multiple times. Venus is not the only person in the fund that we're happy to share. I can tell you guys more stories if you'd like, but Dale received really strong returns over the course of about a year and a half. Then he went into our fund and has been a fantastic sponsor ever since. And on the other side, you can take a look at Venus. Her and her family were financed by our pilot company, Cootie & Co. We've since rebranded into the Lucky Group and are looking to obviously continue these success stories in the future. Currently, we are at about 17 active notes in the fund, with it continuously growing every month. Again, we're pretty selective on who we work with on the home buyer side because we want to make sure that we're not doing them wrong, that we're not doing our investors wrong, that we're not doing us wrong. But this is obviously a great example of how we help people on both sides. And again, we're looking to continue this mission for as far as we can go to as many different markets as we can be in and still help everyone in the process. Like you said at the beginning of the webinar, Christian, win-win-win is the name of the game.
Absolutely. I mean, just to be able to function as a company or as an organization with integrity is absolutely incredible. I know that we probably think of a few companies out there, regardless of what space they're in, they sometimes don't carry themselves to the best possible capacity that they could. But that's something that I like about the Lucky Group is that you function with integrity. You don't let people bite more off than they can chew. And same thing here with us. We're very big on integrity. If I could say it's one of our core values here, we never want to steer someone wrong or let someone make a mistake in any way. But that's absolutely incredible. And I hope to keep hearing these amazing success stories of all these amazing people who are given the opportunity to have the home of their dreams, in all honesty. Kind of moving forward, onto one of our final questions here. Why might now be a timely moment for some investors to consider this opportunity with the Lucky Group?
Definitely. From potential interest rate shakeups to where we were in 2023 with rates going up, down, and all around again. I do think that this is a fantastic time to invest with us. Obviously, everyone should always consider all their options on the table. We are not going to fault you for saying, we're not going to invest at this time. But we do think that this is a really unique time as we continue to scale and continue to grow and continue to expand into more markets where we're going to continue to help more people. Hopefully get into, I would say, 7 markets by the end of this year. A little bit aggressive, but we'll see what happens and where things shake up. But understanding that you are going to get strong returns, we have a 10% pref return on top of a 12% IRR split. Once we do hit a 12% IRR, there is a 30-70 GP split. However, prior to that, we do co-invest somewhere between 2 to 5%. I will get you those final numbers by the end of the day, Christian. But currently capital raising up to $50 million. That's across all investor types. Like I mentioned, the GP will have a 2 to 5% co-investment, and all proceeds prior to that 12% IRR hurdle will go directly back to the LPs, with the GPs eventually taking that 30-70 split after the 12% hurdle. Really, really excited to again just continue to find transactions like these. I don't know a lot of notes businesses that are, promising these returns, and in our case, sometimes we're going above and beyond them. Uh, I am more than happy to answer any other questions that you guys have. But I believe that answers it on my end. Justin, I don't know if you have anything to add.
I think you hit it. I think that any time that a company like ours is in the point of scaling, it's just a very exciting time, not only for us, but also for investors to participate and kind of get in at the ground floor kind of thing. So I think that that's really kind of one of the most exciting parts. Not only that, there is subject matter expertise and that we're really kind of building groundbreaking platforms that really address some systemic problems that are going to be around in our country for decades to come. And I think that being able to participate in something like that that's so vision and mission oriented, while also the potential for huge rewards, is just a very exciting opportunity.
Fantastic. I couldn't have said it better myself. So since we're speaking about the numbers and the mission, just as us being with investments and things like that, typically how typical do you see investors kind of reinvesting their gains back into different projects? How's the process look? Would you say it's difficult, it's easy, worth it? How would you say?
So one thing that we do want to disclose on this webinar, there's a 1 year lockup period where there will not be any distributions. That's important to note, and we're not trying to sugarcoat it. There will be a 1 year lockup. Again, the reason for that is obviously where we are as a company and where we're trying to go as a company. After that 1 year lockup, you are more than welcome to reinvest your distributions. We can compound them. I'm more than happy to send you over whatever underwriting I currently have in my little bag of tricks, as I like to call it. But trying to think actually. Justin, maybe help me out a little bit on how the distributions may look. I know that we're handling a lot of the contributions as well. Um,
Yeah, I mean,
phone my friend.
there is a 1 year lockup on all funds. It really, like as Jack said, really allows us to deploy like call and deploy capital. And so that's pretty consistent with what we've seen in most funds like ours, in the industry. And so after that 1 year period, investors they will start to receive quarterly distributions to the tune of 10% per year, paid in quarterly increments. And then, as he said, once we basically start to sell some of these notes and create upside opportunities that eclipse and bring investors above that 12% IRR hurdle, that's the point where our investors will start participating in the upside. They'll earn 70% of that. We earn 30. And that really kind of incentivizes us not only to deliver investment alpha, but also for them to really kind of stay the course with us throughout the investment process.
Fantastic. That's the beauty of self-directed IRA money. It's patient money. A year doesn't make a difference. For me personally, I have to wait another 20 years, 25 years before I can actually touch anything. So I may have dated myself a little bit there, but
I think that the year, not like I don't want to say like the year is a building year or anything like that, but we've done a lot of operational improvements and enhancements, like by signing up for an investor portal. That's a comprehensive tool that really will not only allow us to continue to subscribe and bring on investors into onboarding throughout the scaling process, but that is how we will send out distributions. That is how those distributions will be reinvested back into the fund if investors want to do that in the future. So while we're scaling and kind of accentuating a lot of the parts of the platform, that 1 year lockup period is really just to make sure that we're deploying capital on a reasonably expected timeline, and also not kind of creating any sort of situations to where we're on the clock with those investors at the tune of 10% as soon as we basically turn the clock on for them. So we want to make sure that we're not painting ourselves in the corner as far as having to deploy capital in a manner that's inconsistent with like our investment strategy and also with what the investor wants. So that just really allows everybody the time to deploy the capital accordingly. And then also we have the tools and the resources now to really kind of facilitate the additional growth and the reinvestments of those dividends.
All right, very cool. So I know I said last question, but I have one more. When it comes to the Lucky Group and other companies that are kind of in your space, what would set you guys apart, would you say, from some of your other companies in your space?
Great question, Christian. So I'm going to give you a half answer here. And the only reason is it's hard to find companies that do homeowners financing. They are out there, and I'm not going to tell you that we don't have competitors. We do. Homeland is one of them. Ownwell, I believe, is another. Some of them have already been around for, give or take a decade. And yeah, they are very operational and very functional. I would say that given where we're at as a company and where we hope to be in the future, we have a little bit more expansion plans in the works. And again, there are some things that need to happen behind the scenes to make those expansion plans work the right way. But given where we're at right now, the trajectory is really strong. I know that I already kind of mentioned where our hurdles are in terms of our returns, but on average, we're hitting about 15%. Not sure what our competition is doing in terms of their investor pools or what their returns are offering. I can only speak to ours, but I do think that 15% IRR returns are really strong growth trajectories. And just excited to see where those lead us in the future. New markets, state of Texas, where we originally started. And who knows, maybe nationwide.
Yeah, that's awesome. Honestly, there is a lot going on in Texas in every field of real estate, whether it's commercial, residential. There's a reason we're down there a lot. One of our head of strategic relations is down there right now. She's been down there for the past 2 weeks, shaking hands, kissing babies, doing the whole thing, making sure everything goes well. But there's a lot happening in Texas, and I really wish you guys all the best with everything that you guys have going on and all the amazing work that you've been doing, not only with your company, but also with the various clients and customers that you guys have, and keep making a difference. I really, really sincerely mean that from the bottom of my heart.